Thank you everybody for joining us on our Future of Funding series today. We have Rebecca Kacaba of DealMaker here to talk about some crowdfunding insights. And if you have any questions during the session, you can just drop them in the chat box below and Hall will be fielding those as we go. With that, I'll pass it off to Hall Martin of 10 Capital. Hall.
Great. Thanks, Shane. And thank you, Rebecca, for joining us today. I want to thank the audience as well for coming out. Looking forward to your questions here. We're going to have Rebecca kick off and talk a little bit about some of the elements of crowdfunding and her company as well. And then as we go forward, go ahead and post your questions in the chat box and we'll get to those as we go forward. But let's go ahead and kick off. So Rebecca, thanks for joining us. Can you tell us more about yourself and your company?
Sure. Thanks, Hall. Glad to be here. Thanks, Shane, for having me. Hi, everyone. My name is Rebecca Kacaba, CEO and co-founder of DealMaker Technology. In a word, Shopify for the capital markets. If you're launching a deal digitally, we're here with a product suite to support you. We've led international brands in their capital raising efforts, the most recent and probably most well-known being the Green Bay Packers in their offering ownership to their fan community. We've done other similar, even larger raises than that as Cisco Development's Carbon Streaming Corporation. My background, I was a capital markets attorney and worked with a lot of clients who were raising capital and just saw a pain point in the market. Like people were really struggling with this and it was taking a lot of effort to do something that I saw technology being ripe to disrupt.
Great. Well, great deal. Well, we have a wide range of people in the audience. Some are very experienced in this space and many are very new. Can you talk about the difference between Reg CF, Reg A plus, and Reg D raises?
Yeah. So, in a word, the Jobs Act was introduced back in 2012. And when I saw that come in, that's really when I started to get the idea for DealMaker to really allow people to go to the crowd and publicly advertise their campaigns and raise money from the crowd, not just from Wall Street and not just from VCs. And so depending on your goals for doing that, there are different securities law exemptions that you would comply with to do those different types of raising. So think about it in a word, if you're earlier stage, you're looking to raise 5 million or less, you're going to use Reg CF. If you're going bigger than 5 million, you can go all the way up to 75 million, you're going to go Reg A. And then if you have, you want to get off the ground a little bit quicker, there's no cap to the amount you can raise, but you can only target accredited investors only. So you're doing less of an online marketed raise. Maybe you already have a community of people that meet that accredited investor definition. Then you're going to be doing Reg D. And you can do Reg D one of two ways, either to a close community or a broader accredited investor community like an angel network.
So how does a startup choose between the three if they have all three options on the table in front of them? How do you coach them to choose one or the other?
Yeah, I mean, every deal in our system, we make sure they have counsel to kind of talk them through the goals. But I think the first selection process for a company is whether they're doing a marketed raise or not. And marketed meaning, you're going to go online, you're going to advertise the offering on Facebook, TikTok, online ads. Maybe you have an influencer in your network. Maybe you have a mailing list of people who are already interested in buying your product. And so if you have any of those things, then you're thinking about doing an online marketed raise. If you don't, maybe you're doing a more traditional round, then you're not going to be doing Reg CF or Reg A. You're going to be going the Reg D route.
Great. So what companies do well on crowdfunding or in the different fundraising models itself? Who do you see being successful?
We see a broad variety of companies being successful. We launch between 35 and 40 new deals every month, all different types. So we see a lot of success with the varying different types of exemptions that people are using. I think for marketing, you're going to be thinking about a little bit how the story is going to resonate with your investors. And so you want to be thinking about really telling a story. Accredited are going to be looking more at the metrics of the company and really analyzing the financial model. When you're doing an online raise, you need to make sure that's a story and a mission that resonates with the people. Of course, it has to be a strong, viable business plan, and you're going to be doing filings with the SEC, and they're going to make sure that it is. But you're going to be thinking a little bit more about how the story is going to resonate with the people that are buying it digitally.
Great. Well, does crowdfunding help level the playing field for founders? If so, how?
Yeah, absolutely. I think, you know, from a lot of the statistics we've seen in the industry, when you're not getting out there face to face, it eliminates certain bias. So, you know, King's Crowd, one of the rating agencies in the space, recently released their 2021 market intelligence report. And it showed that, you know, minorities and female founded and led companies were represented over 34% of the equity crowdfunding capital raised, where if you look at traditional venture capital, you know, those kinds of groups are receiving more like 2 to 4% of the capital raised. So that's an enormous difference in the diversity of the types of founders that are raising capital this way.
So what do you point out is the key to a successful fundraise? What are people doing that makes them successful?
There's a couple of different things. So I think if we're talking about, a lot of people in the crowd are probably thinking about, is a marketed raise right for me? And how am I going to raise that capital? And there's kind of 3 B's we like to break it down by, right? You can build it, borrow it, or buy it. So if you're building the excitement for a marketed raise, you can do that through your audience, through your customers, through your community. And that's the way you're going to build excitement for your own offering. If you buy it, you're going to use digital acquisition and marketing tools. So traditional SEO, Facebook ads, those kinds of things. And then finally, if you decide you're going to borrow it, you're going to go to someone else's audience, like an influencer, a newsletter, an angel community who has a captive audience, and you're going to bring your deal to that online community, and you're going to get some traction from your deal that way. And so those are the 3 ways that we've seen offerings be really successful. They pick one of those routes, or maybe they try all 3, and then they really build up a campaign around one of those routes, and then they pivot, right? It's like any capital raise, no matter whether you're doing a Reg D and you're knocking on doors, or you're sitting down at tables on Wall Street and you're trying to get interest in your offering, you really need to pivot your story to what's working and what's not working.
I'm interested in the borrow mechanism where you use influencers. Are these like social media influencers, or are there other people that you would draw in, and how exactly does that work?
Yeah, that's exactly it. It can be, you know, companies that have people involved who have a bit of a backing behind them, or, you know, they get featured on a financial newsletter that has a bit of a backing behind it. All of those different things can be really, really successful with an online community.
Great. And so we have a lot of companies out here that are thinking about doing a crowdfunding raise. How much time should they spend on preparing for the campaign? What do you coach startups to do before they launch the actual raise?
Yeah, so they can reach out to us. I think, you know, our sales reps we have a broad partners network that will allow them to put all the pieces in place that they need. The first thing they're going to want to do is look at their financial statements and make sure the financial disclosure is ready. And that takes a bit of lead time. They're going to want to, you know, settle on their go-to-market strategy with the build, borrow, or buy, and start to work with partners, whether it be digital marketing or the influencers, or just setting up an email cadence with their own community. And so that's part of strategically setting up to bring the offering to life. At the same time, they're going to prepare disclosure documents that they're going to file with the SEC. So with Reg CF, that's a Form C. It's much shorter. With Reg A, it's a little bit longer. You're going to file it with the SEC with your counsel. They might have some comments back and forth. So for the Reg A, you're going to want to have the financial statements ready as well as that disclosure document. You get that filed, and then while the SEC is looking at that, you work with, you know, your marketing agency and DealMaker, and you get the offering really well set up, so that by the time you get the SEC approval, your landing site set up and you're ready to launch the offering.
How long do most crowdfunding campaigns last?
We see people going anywhere from a couple of months to 2 years.
Great. And how about Reg D offerings? What do you see there?
Usually a little bit of a shorter time span. So those would probably be around the 3-month mark.
Wow. How about a Reg A plus? What do you see going on to get to a 50 or $75 million range?
Those are on the longer end. So the Reg CF would be under a year, like 8 months, kind of 6 to 8 months to a year. And then Reg A would be, probably 6 months all the way up to 2 years. We have some issuers who leave them open and then reprice and continue to use it as an ongoing financing method. There's a lot of really interesting things happening in the space with people formulating different types of offerings and seeing how those resonate with the market and then tweaking it as the company grows in size.
Great. And what's the most important thing a startup should do before they launch their crowdfunding campaign? What do you see people missing sometimes on it?
I think formulating the messaging for the branding is the most important thing. So we have a DealMaker arm called DealMaker Reach now that works with some of our issuers on campaigns. We also have a very strong network of other partners who can help with the landing site setup and the message formulation. And I think that's really important to getting the messaging tweaked and crafted correctly so that the campaign will become a success. We see a lot of the capital raised as the campaigns are closing. There's a huge amount of campaigning that can be done once you've figured out what the messaging and the branding that works is. And so all of these strategies in terms of timing the offering are really important to committing to get a successful launch. And those are the campaigns that we're seeing that raise the most, that are putting that kind of effort and level into doing it. I think, the DealMaker gives founders a real element of control over their raise and allows them to control, the security they're offering, the valuation, and the way they run the campaign. And so the people we see most successful really take that control and run with it.
Once you launch the campaign and get it going, what should the founder do to help carry the campaign forward? What should they be working on?
Well, through the software that we have, there's a huge amount of ability for them to monitor their pipe and to engage with their investors and help manage their conversion. And so the people that are doing that most effectively are raising significantly more capital, because it's not like a portal when you would, have no visibility there. You do have the visibility. You can do follow-ups. You can give those investors a call. Their phone number is right there on the screen, and help sell them on the offering. And so if you look at your conversion funnel that way, selling securities, we always say selling securities is the same as selling shoes online. You've got to build a funnel and then you've got to convert that funnel. The people that we see being most successful are managing that conversion funnel, doing a really good job of that. And that's leading to higher closing ratios on DealMaker.
Great. Well, in the crowdfunding world, you have a choice between putting your deal up on a standard portal, the WeFunder, Start Engines, and so forth, or running it on your own website. What are the pros and cons between one or the other? Because I get a lot of people asking me which way they should go on that.
Yeah, I think, portals are probably good if you're raising a smaller amount of money and you want to leverage the community that's available on that portal. But the con is that, if you're very brand focused, which a lot of companies who are doing online marketed raises are, you don't have a lot of control over your brand messaging. You also often don't have control over the security that's being issued or the valuation that you issue it at, which is not as founder friendly. So you're listed alongside other companies that are vying for investors' attention. And if you do want to spend money on digital marketing, you're basically spending money to drive those investors to a page where you might lose their attention and lose their interest, which is, anybody that knows about building a sales funnel, exactly what you don't want to do. And it's going to increase your cost of customer acquisition or investor acquisition very significantly. So by using DealMaker, the company can set up their independent landing site and drive traffic to that site, use our pixeling functionality, use our proprietary investor ranking algorithms, all of these things to build a really strong funnel that just leads to stronger and better conversion.
Right. And so what do you think is the primary mistake people make when they run a fundraise campaign?
I would say not being active enough. I think sometimes they think I've seen some really, really good brands that I was really excited about, just kind of throw up a page and let it sit there and think that it will manage itself. But I think the companies that we see most successful are the ones that take an active interest in their raise and can lead to some really strong traffic and some really strong conversion.
Well, great. So anybody in the audience, if you have a question, go and drop it in the chat box. And one of the most common mistakes I hear startups make is they think the portal is going to raise the funding for them. And we've had people come in and say, well, at the end, it was more like 5% was raised by the portal. And, I did the other 95%. What numbers are you seeing out there from the issuer versus the portal, and who's doing the lifting there?
Well, I think that's kind of the trouble on the portal, is that you really don't get any access to any kind of data that's going to tell you the difference. And so, anecdotally, I've heard, that as the portals list more deals, the amount of capital they can raise has gone down, but they need to grow as a business. So, anecdotally, I'm hearing a couple 100,000, whereas the amount of dollars that issuers are driving themselves with the marketing dollars that they're spending, we're talking millions and millions. We have issuers like Trust Stamp, running a Reg CF, hitting the 5 million cap, regularly have issuers in Reg A plus doing, 20 million plus.
Great. We have a question from the audience. I think it can be interpreted in two ways, so I ask it both ways. The first way is, do you do more than crowdfunding? Maybe do you do Reg D and those type of things? Can you talk a little bit about that?
Yeah, so DealMaker is a back end, an invest now button that you can plug in. You get full analytics tools and all of those things to run your raise. And that raise can be whatever type of raise you're running. It might be fund formation, it might be a Reg D, it might be any exemption. We've done deals for a US company that's specifically raising in the UK, and they need to load up a UK exemption so they can target the market over there. Our vision is really to give you the tools to create a global capital market. So we've run raises for French companies, Australian companies, UK companies. We have every Canadian exemption coded up. There's no limit to the exemptions that we can do to keep you compliant in the jurisdictions you need to be.
Great. And then the other interpretation is, do you do anything beyond fundraising, any consulting or advisory, anything else?
We do have the marketing arm that can do a limited amount, but the main thing that we like to leverage, and we have a broker dealer as well as a transfer agent, so we can help with the securities issuance. We also have a very strong partners network, over 180 partners in the network, including 10 Capital. So depending on what the client needs, we definitely have someone in the DealMaker family that can help.
The next question is, can Canadian listed companies trading on an exchange in Canada use the DealMaker platform?
Yes, absolutely. We have a significant number that use the platform regularly.
Okay. And to go back to what you said before, you work in any jurisdiction, UK, France, Russia, wherever. Is that true?
Not Russia right now, but yeah. Other than Russia right now, for different sanctioning reasons, we have the capability to work in any region. And back to the Canadian listed issuer, we are getting a lot of inquiries right now from Canadian listed issuers looking at Reg A plus. As I know, the small cap broker dealer network has dried up on funding a little bit there. Companies like psilocybin, a lot more of those, because the Reg A exemption is open for anyone with a North American head office. We're getting a lot of inquiries from those kinds of companies to leverage the US investor base using a Reg A plus.
Well, I have several US angel groups wanting to share deal flow with European angel groups, but the different domains can make it tough. How can DealMaker help those guys?
Yeah, we set up, our customer success are heavily involved. You get a rep for every deal. They'll look at the deal with you. Sometimes, for the Green Bay Packers offering, it's if you're from the US, click here to invest. If you're from Canada, click here to invest. Sometimes we put it all together on the same deal and the software will parse out which exemption the person should go in based on their address. So we just look at optimizing that experience for the investors, right? We want to ask them the least number of questions and get them to the finish line where they're transferring funding through our platform as quickly as possible.
Great. Next question is, what are all the fees, including DealMaker, and what amount should be budgeted for marketing?
So the DealMaker fees will vary depending on the type of deal you're doing. For using our DealMaker basic product, it could go anywhere from a couple $1,000 to doing a full-fledged Reg A, wanting the full package. You're going to be paying significantly more for setup costs, for the technology, the broker-dealer services, and potentially the marketing services. So I always tell people for a Reg A, you want to budget about 150 all-in costs for legal counsel, getting your documents. Audit might be on top of that because some companies are in different stages of audit. And then the amount that you raise, you can use that with regular closings to drive that back into the marketing budget. And the marketing budget is something that on your P&L as a company, you want to look at that not just as cost of capital, but cost of regular marketing budget, because every company has that, right? And so you're going to want to build awareness from your brand either way. If you look at some of our clients like Miso Robotics or WorkSport, who had really successful Reg A raises, some of the contracts that they got, some of the championing they got from their investor base actually helped them build the business. And so I always advise that you look at your marketing budget in terms of also company building, not just cost of the raise. But I would say, typically our team will, set up cost maybe 50 to 60 on marketing, and then a monthly spend of about 30,000.
Right. And then what do you view as an acceptable return on ad spend with digital marketing spends?
Depends on the campaign and depends on the compilation. So our team can give a quote, and they typically will, depending on the messaging of the company. Some companies, they can take to various, deal in communities, and they know how to access that. That's going to be a lower cost of capital than some other companies that might just be more difficult to message. So it can be really custom. If you have an influencer or you get picked up by a financial publication, those things can happen. Those things can have virtually no cost to helping expand the capital raising. That's going to average out a much lower cost of capital than if you buy, for every investor that you put through your deal.
But if you have a plain vanilla CF deal and I'm looking for ad spend, would I expect to see 4X or 5X, or would I expect to see more like 2X or 3X, or what range are we going to be finding this in?
They'll quote it based on the messaging, like somewhere in those neighborhoods, and you budget that initial spend, right, to do the testing, and you want to do the testing with low ad spend in the first couple of months so that you use your capital efficiently until you figure out the right pools for your messaging, and that's where you start to ramp up your ad spend. So depending on how effectively you do that, that's where your cost of capital comes in. And some campaigns it'll take longer to find than others.
Great. Any techniques on how to find that magic mix between the message and the platform? Do you have any experience with Facebook, TikTok, and those that you think one is better than the other?
You probably have to ask my marketing specialists. They would know better than I do. I mean, they know all kinds of these tweaks in the system, right? Like when the war broke out between Ukraine and Russia, like everyone ramped down their ad spend. No one was reading anything about marketed securities. Everyone was reading about the war. And so, anybody who would have been pushing ad spend at that time would have had an exorbitantly different ad spend than people that paused during that period.
But you think any ad spend is a good ad spend? If I got down to 1X ad spend, would that still be worth the effort, or should I be looking at something else at that point?
I'm not going to comment on it. I don't think I'm in a good position to. I don't want to lead anyone astray.
Okay, that sounds good. Anybody else have any other questions? Go ahead and post them in. Any other tips you have for people that are running campaigns out there that they should be aware of around regulatory, perhaps?
Yeah, I mean, we want to use practice counsel who have done these deals before. We've seen counsel who are not deep in the Reg A or the Reg CF space, not get the state filings done correctly, not set up the offering in a way that it can stay open as long as the issuer ends up wanting it to. So we can recommend counsel that we've seen who are experienced on these, who have done it before and do a really good job. Structuring, offerings for Reg A with escrow needlessly if they're not experienced. So I would say come to us. We can send you to the ones in our network that we see doing deal after deal after deal. They know how to do it really well. And that will benefit the issuer tremendously in the long run.
Great. Can you talk about some recent successful crowdfunding raises you've been a part of and how it went down?
Yeah, the trust stamp one that I mentioned, they closed that up fairly recently. They hit their 5 million cap. They did really well on that. EI Ventures was a really successful psilocybin raise. They did close to 25 million. They just closing that up.
Are there any changes coming up in the regulatory world that you're hearing about? They changed the rules to $5 million limit for CF and 75 for Reg A, but I haven't heard of any other changes coming out. Or do you hear anything on your side?
No, I think there was a commitment to review those caps and potentially adjust every 2 years. And so it'll be, probably another year before the SEC reflects on how those changes went and whether they're going to make any further adjustments.
Great. Does anybody else have any questions? Go ahead and post them in now. Otherwise, we'll go ahead and wrap up. You have any final words you want to tell the audience about this? I do have a question. How often do you see companies raise multiple crowdfunding rounds? Do you think there's a stigma on a company with 5 rounds?
We have a lot of repeat issuers. I think there is really much developing a landscape where you're seeing community rounds happening for some issuers. The same way there's Series A, B, C, D, you've got different levels of community rounds happening. And so I think there's definitely ways, we've come up with a model for Reg CF on having a community class so that you can keep that investor base clean on the cap table. And so there's different methodologies that are developing so that you can always have access to different types of funding at any level. And so I think that's really always the issuer's concern. That was my concern when I was raising rounds as well, for sure. And that's what I did, I think, quite successfully with funding DealMaker. So you want to be smart about the cap table structure that you end up with. And, we can facilitate SPVs or the community round structure, anything that you need to be able to run multiple community rounds, because there is very much an ecosystem developing where people can use this method of funding again and again, which is really exciting.
Can you speak more about companies starting with a Reg CF, maybe on a platform, and then going to an independent, separate Reg A plus?
Yeah, we do. We see a lot of that. We have people who do a Reg CF. Maybe they are at a lower valuation, right? They're at 4 mil, maybe 8 mil. They want to do a couple 100,000, minimize their dilution as much as possible. So they do that under a Reg CF on a portal. And then when it comes time that they're ready to raise a more significant amount of capital, they want to get the financial statements ready. They want to file a 1A. They want to set up an independent site powered by DealMaker, and they want to get really serious about a bit more of a marketing spend and driving some more traffic and leveraging the 3 channels that I mentioned, so that they can drive as much capital as possible. And again, that might be a little bit more when the company's further along, so that they can do that build, borrow, or buy at a more significant valuation.
I've heard many Reg A plus take a minimum of 6 months to prepare, given the amount of regulatory and legal you have to go through. Is that the time you're seeing, or is it longer or shorter?
We see it vary from deal to deal. It depends if they have financial statements ready, because that's the big driver. If they have some disclosure ready from a Reg CF already, that will significantly help them prepare the 1A as well. Working with experienced counsel really helps a lot, because they know how to frame the 1A and you don't get tied up in rounds and rounds of questions. So if you've got good counsel, they can get you through there with very minimal questions. because they know how to frame things properly and how to frame the offering. If you start working with like escrow and deal minimums, you're looking at a whole nother ball of wax.
You think it makes sense to run a Reg A plus on a portal, or you think everybody should just go to their own platform at that point, given the portals can only go so far with it?
Yeah, I don't think the portals are set up for Reg A. I think they specialize in Reg CF, and where we've been really helping to build out the market is allowing people the power to run these standalone raises, giving them access to their investor list so they can export it, giving them access to the proprietary algorithm, investor ranking algorithms we built. So as you've got thousands of people coming in, the software is telling you who to call first to close those bigger checks and to get your capital up. All of these kinds of things are going to lead you to have much better ROAS, which is going to run a much more efficient offering. So we're just continuing. It's really an exciting time in the industry as we're working with our clients to just build out the Reg A market and make it more and more effective for issuers.
How often do you see people going from a Reg CF to a Reg D versus a Reg CF to a Reg A? What's the different distribution there, at a high level?
I used to see, before Reg CF went up to 5 million, what we used to see was a lot of people do a Reg D to raise the seed capital that they would then immediately go and do the Reg A. Once Reg CF went up to 5 million, now we'll have people do a CF so that they can raise, the 4 mil or a good amount like that, and then come back and do the Reg A with us. So we see all different compilations. Sometimes we see a seed round with a Reg D, then a Reg CF, then a Reg A.
Great. If there's any more questions, go ahead and post them, guys. My last question is, can you talk to us about your crowdfunding raise and how it went down for DealMaker?
Yeah, so we did, we were fortunate to get the company off the ground quickly. I did essentially a Reg CF as a Reg D, so small checks from a large group of people, non-voting type structure, and that worked very well for us.
Great. Are you planning to do another round, or are you finished with it?
Yeah, we may for some mergers and acquisitions. We'll see where the market takes us.
Great. Any last words you want to share with the audience at this point?
I think if you have any questions, there's a lot to digest. There's a lot of information here. You can reach out to us at info@dealmaker.tech. Our reps can walk you through some of the various options, some of the pricing that's applicable for a different type of round that you might be doing, or maybe just make some introductions for you that might be helpful.
Great. We'll share that with the audience afterwards through a follow-up mailer. I want to thank you for joining us today. If there are any other questions, guys, we'll be glad to connect you with DealMaker directly and Rebecca and her team, so you can ask those questions, because there is a lot to parse through here on this, a lot of detail and a lot of choices to make as well. But I appreciate you joining us today, Rebecca, and thanks so much for sharing your time and your experience with us.
Thanks, all. Thanks for having me.
Great. With that, we'll go and close it out, and we'll see you guys next time. Thanks so much for the good questions. Rebecca, thank you for what you've done.
Thanks. Bye.
Bye-bye.